What's going on, guys? Good morning. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. Hope you are having a good one. Wanted to obviously just come in here and give you guys a very quick update. And we're just kind of going to run through a couple of different scenarios here to get you prepped up as usual pre-market. So before we start, make sure you just help me to click that like button. That's the only thing that I really truly ask for, so that this video can reach more traders or investors and kind of help everybody to get through the pre-market session. That would be truly appreciated. So let's run through everything as usual. If you have tickers that you want me to potentially do any charting on, please go ahead and drop them in the comments, the chat, and I will go through them. So carrying on from the last pre-market session on Monday, we have been looking at this complete melt up to the upside, which doesn't show any signs of slowing down. Now, I know that there is a shit ton of consensus on social media, whichever corner you go on, whether it is Instagram, TikTok, etc. And everyone's kind of just kind of slandering the market in different ways. more importantly, everyone and their mother is calling for a top here. And that especially so in the crypto world, I think we're seeing more of people kind of getting bearish and saying, oh, we're going to get a crash and this and that. And this market's about to melt down. I know there are people who are like, oh, the market's going to crash by 80%. And let me tell you something, that there is absolutely no data to suggest that we have any down crash scenario here. In fact, there is a better chance for the market to continue melting up than continue melting down. And I don't say this based on a source which is like, trust me, bro, but I'm actually looking at the data based on a Nomura report from McElligott, which is a very credible source. And he goes through all of the nitty-gritty in terms of gamma exposure and market maker exposure. And we have obviously also seen another signal from the stock market, which is the bond market. Sorry, not the stock market, but the bond market. And that is your US 10-year yield. Now, for those of you that are not familiar with the US 10-year yield, remember that this is a very good indicator of whether the market is willing to take on some additional risk. And where the market is pricing in the federal funds rate, which is the interest rates target for the better half of the year. Okay. Now, a couple of things are happening simultaneously. First of all, hedge funds are at an all-time high in terms of grossing. Secondly, we have the dollar index that is moving further down. And then thirdly, we have the US 10-year yield, which is also moving further down. Now, the US 10-year yield moving down, along with the dollar index moving down, remember the dollar index measures performance against a basket of currencies. This too already gives a additional energizer to valuations of stocks. Okay. Now, you might be asking how the US 10-year yield relates to everything, or why can I come up with such a conclusion? And the answer for that is very simple, because the bond buyback program, or the covering of shorts, is underway here. If you look at the TLT, which is the right tail of the bond market, or the fat tail of the bond market, 20 plus year treasury bond ETF, you can see that all these shorts are now starting to be unwound and starting to be bought up. Now, does that mean that we're going to see an indefinite buying up of bonds here to just immediately rally up to 100? Maybe. That's not our job. Our job is not to try and call a bottom here and bet to the long side on TLT. Our job is to try and understand why the market is trying to get in this consensus. And that is for one very simple reason, because the adjustment for interest rate expectations are starting to get priced in. And this will have spillover effects in the equity market, which is your NASDAQ and the S&P 500. Okay, so from the macro standpoint, we are seeing some considerable shifts in terms of the expectations of valuations. And so let's go through the scenarios in which and how to actually go about trading them. Okay, now with SPX, as you guys have been watching the live streams, we have been talking about the next level to be retest being the 50% extension here, which was 5200, and then I said that we could go all the way as high as 5300 at the 61.8 extension. Okay, but where we are right now, we saw a little bit of a pullback, which is very, very nominal and expected and needed in order for us to continue running, as I said on the last live stream, right? So if you look at just this recent wave that just happened, and you draw a Fibonacci retracement tool from there, you'll realize that the 38.2 and 23.6 is exactly where we may see a potential rejection. That would set up a cascading wave for a potential further downside. But if we do break through this 5130 level, then that ignites the further upside and crash up scenario, which is the more likely scenario for this next continuing couple of sessions, or next couple, let's say the next one to 2 weeks. Okay. However, in the next month, that scenario changes. Now, how do I know that scenario changes? Because there is the CTA reports that we get that allow us to look at where the market, in terms of the average market participants, are starting to either accumulate positions or distribute positions. And so you can see over the next 1 week, as this was posted on Monday, we had a flat tape. We were going to have 528 million to sell. An up tape would have seen 1.4 billion to sell, and in a down tape, we had 15 billion to sell. So in this actual whole week, which is now Wednesday, we can see that that has played out. Okay, but then over the next 1 month, things get a bit more interesting. right? In a flat tape, we'll have 3.8 billion to sell. In an up tape, we'll have 11 billion to buy, which loosely would be equivalent to about 2% on the S&P. And then in a down tape, would have 175 billion to sell, okay? So we have to be aware that the upside here is starting to get a little capped. But that doesn't mean that we can't go further up, okay? So understand that. It's not about guessing where it's gonna go. This is more about understanding how much the CTAs, or the bigger Commitment of Traders Association, have firepower. So in a down tape scenario, we have a lot more to sell than in a up tape scenario, and that's one of the most key things that you need to understand, okay? So I post these reports on our Discord community, obviously, and it's just something that you should keep in the back of your head, because you know, the numbers do make a difference, and they do tell us a story, okay? So having a look at where we are right now, 5120 to 5130 is your key rejection zone. Okay, this level here is a key rejection zone, and if we do break above it, then a retest of the 5130 will allow us to move to the upside. Very, very simple. If we reject the 5130 level in this area here, then that sends us back down to the 5037 level, and then beyond that. So by that time, we'll have another live stream, and you know, I'll be able to give you guys more updates. Now, quick little announcements. First off, next Monday's live stream will be pre-recorded and posted for you guys, so you'll have access to it on demand and whenever you want. I'll post the link for it when I upload it to the YouTube, and just know, because the reason why that's happening is because I'm going to be out of town for some wedding shopping, and so I will be not at specifically able to come live, but I will be able to record it and upload it for you guys. Okay, that's the first announcement. Second announcement is that I have exactly 2 spots left for a one-on-one mentee-mentor situation. We have a new fresh batch of students who are going to be joining the initiative. Now, just to give you a little bit of background, we accept all levels of traders or investors. You might be somebody, for example, we have students who have a large chunk of their cash flow that they want to invest. We can help you with that. You might be a trader that's looking for you know, more guidance on finding out what you're good at and bad at. That's also possible. You might be someone who is just lost. You don't know where to start. That's also possible. We cover every single thing through the one-on-one sessions, and if you're interested in that, reach out to me on Instagram so we can talk and we can figure it out through a 30-minute call. Okay, very simple. Okay, that's all the 2 announcements that I have, and welcome in everybody for the live stream. Good morning. What's up? Hi, Karina. Okay, so now that I'm done with the announcements, very quickly. So with SPX, we have 5120 to 30 as your key pivot point. Break above, retest gives you the upside at 5170 or so, and then followed by an explosive move to the upside. If you reject this level, then the retest is going to be 5038 or 5040, which will be the next key level down here. Okay, so that's your upside downside scenario. Now with NASDAQ, you can see that we kind of came down into the dual zone, which is your role reversal, this previous resistance turning into support level here, which typically is a good sign that we'll see continued upside momentum. Now, based on where NASDAQ is, the 18,200 level will be the key level for rejection. So that's going to be your key pivot. Up a break above that, we'll see further extension. Break a rejection below this, we'll see further downside. Okay. Now, another part of the market that we've been talking about for weeks, right, is going to be the IWM, right, small mid caps, and these are early play, right? We're early on this one because we are awaiting the possibility of rate cuts and a possibility of the market continue to melt up. And if that happens, then small mid caps are going to be doing really well in that atmosphere, right? Now, IWM doesn't really get any clear liftoff or clearance until you get above 212. But 209 is a decent spot for a potential rejection, and then confirmation here for us to kind of take more positions. Now, full disclosure, I do have a long position in IWM, okay? And I've posted about that multiple times. I've told you guys about that multiple times, but I want to make sure that you guys know my bias, because for example, if I keep my bias hidden, then I'm misleading you, which is not cool. Okay, so I'm just letting you know I have a long position in here, and for obvious reasons, because small mid caps will have a good run if interest rate expectations come to a cut more sooner than expected. Okay, so that's your update in terms of macro. As I had mentioned about bonds, I explained that. I mentioned about the dollar index, I explained that, and the VIX has been still continued to be mute. Now, one of the sectors that I find pretty attractive in terms of I'm seeing institutions talk about this as well right now is utilities. Okay, and obviously it doesn't mean that you should go long right here, but above $65 on XLU, which is the utilities ETF, would see a nice little move to the upside. And obviously you need a break of 66, 67 for us to really see some explosive move to the upside. But remember that if utilities start breaking out, that means that the market's going to start moving down. Okay, so this is a trade only for a fail-safe where you're looking to protect your portfolio. Okay. Now moving on to Apple, we have seen over the past 2 sessions on bad news. Apple has been actually hitting quite a brunt because there was some news about the sale of its iPhones being shrunk by 24% in China for the first 6 weeks of the year. And so this has been selling off a little bit like hotcakes, right? Now, just FYI, the stock is still overvalued at $170. I really wouldn't buy Apple for adding it to my long-term portfolio until it gets to 150, 160, this range over here. Where my demand zone is. And so if Apple does drop that much, then yes, I'll buy some shares. But other than that, I don't need to add this to my portfolio long term. And to trade it here might have further downside. So I'll be cautious still until we actually get down into 167, 166, 165. Okay. Now Tesla. Right on Monday's live stream, right at the end, I told you guys that I was looking forward to trade this. And then I basically fucked myself because I tried to play a reversal trade and then ended up taking a 20% loss because I had a stop loss engaged on my trade. Tesla never bounced. It just continued melting down, and it continues to melt down here. Now, next level further downside on Tesla is if it breaks below 177, okay? And below 177 here sees further downside all the way to 167, which would be a pretty long extension. But remember that this is a big megaphone pattern that's playing out. And so that's what I'm kind of waiting for over here. So if you kind of get rid of this, you can see the megaphone pattern. If it comes down, it's likely to come down and nick this 167 level before it gets a bounce, okay? This is just purely technical, but once again, Tesla is one of the stocks that is kind of suffering from a weak expectation in EV sales and increased competition in China, whatnot. So that rhetoric of the stock right now is suffering. However, I will say, if Tesla does come down to 167 or 168 down here, right, that is a good spot to once again add some equity exposure. And then eventually if it comes down to 150, I would love to load more shares, okay? So that's just my take on Tesla. I think there's a little bit more downside, and we'll see how this plays out in the next couple of weeks. Okay, now obviously this level here where we're trading at 177.47, or like around this 23.6 extension to the downside, can also turn into a key support. So we really just have to be really careful here, because what can happen here is we see a little bit of sideways winding action, maybe like a bear flag continuation, and then the further drop after that. So you have to be patient with Tesla and wait for the right opportunity. Okay. All right, let's do some of the ticker breakdowns. Okay, first one is going to be Costco. Let's have a look. Okay. Costco. We need to get rid of one of these. Let's do this. Oh, ooh la la. This one's like all-time high price discovery vibes. Like, I mean, this is, just looking at where you were in the previous wave all the way up here. So we are pretty close to the 61.8 here. Now, can I take a look at Costco? I can. Now, this thing is in price discovery and just keeps moving up. From a trading perspective, obviously you don't want to go further upside because your risk-reward ratio is capped and you don't know how much further this can go to the upside. If it breaks 774, then your upside is to 800. If it rejects at 774, then I would go for some 750 or 740 puts, right? But one thing about Costco is that it's a very slow moving stock. So my advice to you here is to let this one play out the way that it will. And it's very uncertain at this moment. Like, you don't have any reason to trade this right now. It's not something that I would trade personally. If you're looking to, I don't know, sell calls, maybe it might be a good idea because you could collect some premium against shares. But other than that, I don't want to be an options buyer in this market right here. Okay. So I hope that helps you out. SMCI. Okay. This is the famous super microcomputer. Okay. Okay, so this one, once again, like a parabolic move. So, just in general, general advice, okay, general advice. For stocks that are moving in a parabolic fashion, okay, things that are moving in a 90-degree angle like this, Costco, SMCI, you know, cryptos, blah, 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 blah. You never want to try and chase it, first of all, and then you don't want to also bet on the downside because you seriously don't know where the top is going to be and then where you're going to get the selling pressure coming in, right? So you can see this has a shit ton of profit-taking, manipulation, profit-taking, manipulation, profit. Like, this is just something that I wouldn't touch right now. Just altogether ignore it, keep it out of your watch list. You can start touching it only when a consensus shifts in the market, where the perception of the market changes. That's when I would start to, you know, potentially get into this and play it to the downside or something like that. But right now, I don't think you should touch this, right? You're gonna buy some $1,200 calls. What happens if tomorrow the thing dips all the way down to 1,000, right? And it's pretty big market cap too, right? This is 61 billion market cap. So my advice is stay away from stocks like this. Things that are trading at all-time highs and whatnot, leave them be. There's so many other opportunities, guys. So many others, right? Look at Domino's Pizza. The earnings coming up in, for example, 2-3 weeks. This could be an earnings run-up play all the way to the 61.8 moving average, right? Disney, look at this. Almost trying to break out here, right? There's so many other great setups. Synchrony Financial trying to break out of a key level here, right? Micron also trying to break into all-time highs in price discovery, right? Roku coming down from a bottom megaphone pattern and potential bounce, right? If it doesn't bounce, it's going to drop further, right? XOM, look at this one, right? Has a potential for a retest of 105 and then a long entry to 108, 110, right? There are so many other setups. Stop looking at the ones that are running like crazy. That is my point, okay? Because that is the start to your FOMO, greed, fear mindset. And that's going to wreck you. If you're a new trader that you don't know how to manage your emotions, you don't know how to manage your portfolio, you don't know how to manage your risk, you're always going to see the opportunity where things are not there, okay? So just word of advice for you guys. Just stop looking at things that are moving like this parabolic and start looking at actual setups that have potential, okay? I just showed you 5 of them. And you just need to go through your list and you need to make sure that you trade the ones that have absolute confirmations and are within your risk parameters and you are choosing good contracts and you're managing your risk. Remember, above managing your risk, there's nothing more important, okay? All right, so Quavo is asking about Coinbase, so let's have a look at that one. Okay, so Coinbase, now this obviously, let me have a look. It just hit the 61.8 extension. And obviously from the long-term perspective here, let's look at the daily chart. You can see that we have breached the 226 level, which was a key level. Costco needs to, Coinbase needs to find support in this area between the 207, 208 all the way to 225, okay? 208 to 225, it has to find support and build a base here. In other words, there is likely to see some consolidation here, but if crypto continues to be crazy and Bitcoin continues to rally here and break out, then Costco is going to easily continue higher into the 259, 260 range, okay? So what I would suggest is watch for the next 1-2 sessions how this interacts with the 226 level first. If you lose the 226, then there's very likely that it will come down to around the 210 level for bounce support. Okay, so your key level is going to be your 226 first, like where it is pretty much here, and see if you can bounce here. So I'm going to go into a smaller time frame so you can see what I mean, right? Where you are right now, okay, is where you want to see the bounce. Essentially, it's up here, right? So you want to see it kind of form a base here, and then it can move to the upside further at 259, 260. If it loses this, it's likely to go further down to retest 207. And if it loses 207, then we talk about the further downside scenario here. That's only if crypto start trading further down. Remember, Coinbase is a very, very crypto correlated stock. So you got to understand that, and you need to put that into perspective. Okay. So with Coinbase, your key pivot is going to be 225 and then 208. Okay. So there's also a little bit of downside potential here if rejection happens at 208. Okay. So I hope that helps you with Coinbase. Okay. So next one is mRNA. I think the stock is doing pretty shitty, right? Inverse head and shoulder pattern on the 4-hour, looks like it, right? You can see it pretty clearly. This is your left, right shoulder, your head, right? And it's a slanted inverse head and shoulder. So you kind of, it's not a very clean one, to be honest. Not a very clean inverse head and shoulder. It's slanted, it's a bit lopsided. You know, this is not a perfect head and shoulder. Yeah, I personally don't like this setup very much. But then if you drill down into 1 hour time frame here, it's also forming some sort of a pendant style move, which is looking something like this, right? And it has obviously the potential to break out. So just making it simpler and easier, once you have your pendant style, you can plot your upside downside pivot. Your upside pivot is going to be $99, let's just call it 100. Your downside pivot is potentially going to be, let's see here, it's way down, to be honest, way down. You know, if you want immediate downside pivot, it's here, but then your risk to reward ratio sucks, right? So let me explain this to you. So very simple, right? This is just a bad trading opportunity. So you're stuck here, right? Let's say you break out here and you retest $100, or you retest where you broke out, right? Then the upside is capped at around, what is this level here? 105, right? So your risk to reward ratio sucks for the upside, okay? That's out. Next one, downside scenario. This 92 is your key pivot. Let's say you break below 92, you start retesting 92, right? Then your downside is going to be at this level here, right? Let's just call it around here, right? Which is 85, right? And that still means that you're taking this risk to get this reward, which is still a sucky risk to reward ratio. So my point is, this is just overall not a good trade idea. You need to wait for a breakout, you need to wait for this to gain some momentum, you need to wait for it to move in a separate direction, then we can relook at this. Does that make sense, Quavo? Sorry. I hope that helps you, okay? So just remember, whatever you look at, don't get caught up in like the you know, oh, it's forming head and shoulder, blah, blah, blah. Look at the risk to reward ratio options, right? Look at how the thing is moving, look at everything, okay? It's not just one thing, okay? Okay, Natasha, so Amazon. Okay, now Amazon is an interesting one, and obviously this has got pretty good upside. Now I will show you guys that yesterday we had a pretty big amount of Amazon 2026 185 calls. Okay, that means you're looking at a like leap trade here. And this is what we call share replacements. So somebody is replacing their shares with options. And this was almost $7.6 million put into this position. Okay, 185 calls for 2 years out. Okay, now granted that it is kind of out the money, which is what, $10 out the money, right? This still doesn't give us super strong conviction. Okay, because you do not know what capacity that person bought the 185 calls for. The reason why I showed you the 185 calls is to show you that there are people who are betting immense amounts of money. But remember something, this was on the ask side, okay, and the volume was, I believe, it was 5,000, and it was 0.2, no, 0.3. It was about 1.5 times the usual volume. So not a very strong bet, but obviously a big player here is buying shares, synthetic shares, which means they're using options to buy a long-term position in a big move to the upside, okay? Now, having said that, I think Amazon has the capacity to go retest 187, right? Which is this upside here. And I already initiated a long position yesterday, but I might roll that position if I can't make profits from it. So I personally think that 187 will be the obviously the key pivot for price discovery. That's going to send it up to 200 and then 210, 211, and then we'll have a new Fibonacci to draw after that. Okay, so if you move this up here, for example, then you get your new Fibonacci levels to the upside. But right now we don't need that. We just need this 187 level to be hit, and that's what we're kind of looking at. There's a very small upside here that needs to be taken out. So for Amazon, I would watch very closely at 186 for a potential rejection. But if it does break that, then it's moving up into 199. Okay, if it fails to break out 187, then the trading plan should be to short that and kind of buy some 175 puts instead. Don't go too low. Don't go 170. That's too far. Buy some 175s or 180 puts so that you can play a smaller move down and be in the money quicker. Okay, so I hope that helps you, Natasha. And yeah, that's all I kind of have for you guys today. Cryptos have been going absolutely crazy, yeah, so I hope you guys enjoyed the stream. Once again, if you are tuning in, just help me, click on the like. I truly appreciate it. And I will see you guys on Monday with the recorded session. I'll post one on YouTube for you guys. And I hope you guys have a great trading session. Take care, peace, and we'll talk to you soon. Bye-bye.